Hey, what's going on, guys? It's Tex. Thanks a lot for joining me tonight. It is Friday, August 9th, 2019. So in this trade recap video, I want to go over two trades I took in the S&P futures today. I actually caught one of those trades live, and I put together a little time-lapse video, just kind of a fun little video with music and everything. It's condensed into just 1 minute. My creative drive has just been kind of itching to make something. So yesterday and today I put together little time-lapse videos of live trading for you guys. Let me know if you like those. Maybe I'll do more of those. I try to catch my trades live when I can, really just for my own journaling purposes, but I don't like to just have my screen capture recording all day long. So I try to, remember to hit record when I see something setting up, and sometimes I forget and sometimes I'll miss the entry. And the trade today, I did miss the entry, but I caught it just after I got in the trade, and you'll see that in the video. I'm actually already in the trade, and then I catch it through to the end of the trade. And this video is actually going to be a proper trade recap where we discuss my thesis and my thought process and how I executed those trades. I also took a one trade in my day trade account here. I shorted NVIDIA. You can see I'm walking away $121.52 in the green on NVIDIA. Very basic setup. It was selling off. It was weak all morning, retraced up into the VWAP, started to reject, so I took it short, just going very easy on a Friday, which is statistically my worst day of the week. So I always size down on Fridays, but just shorting 100 shares. And then I was gifted with an instant resolution when Trump tweeted and the whole market tanked. So NVIDIA, you can see from my entry here at 155, within less than a minute, I was already up almost a whole point. So I immediately started scaling out of my position, was able to catch at best about 1.5 points on the trade and scaled out the rest pretty much immediately. So it was a very, very short trade. When I was given that instant move, I just went ahead and took it, walked away green. So between this account and my futures account, I was able to walk away a little over $500 on the day. So very good for a Friday. Very satisfied with that. Overall, it's been a really wild week. Huge ups and downs, very volatile market. Lots of opportunities out there, but it's been difficult to read sometimes because, the whole Trump effect just really can throw a whole wrench into the situation. So very happy though with that. With that said, I would like to go over the trade that I actually took here in the S&P futures. So I initiated the bar replay feature here on eSignal, and this is right after I just got into the trade where we're looking at this. And actually, I want to zoom out a little bit and show you kind of what I was looking at. When I came in, sat down and turned on my computer, pulled up my charts and everything, I actually saw this trend, and this is when I put this trend line on here. This is yesterday's high of day, and then we had this pop up here just after 4 o'clock in the morning, probably on short cover, and then pulled back off of that. So I saw this. I think I was looking at it about here through this trend line on my chart and was looking for a potential retracement up into that trend line to get involved on the short side. Now, I had high conviction that we would have a pullback today. Other than the obvious fact that, you could look at a candlestick chart and see how ridiculously extended we got on yesterday's squeeze higher, which is exactly what it was. It was mostly just short squeeze, and we can see that clearly here in the profile. Look at all these poor distribution areas, or these poor structure areas rather, inside of the middle of the distribution, all these single print TPOs. This is just, obviously panic buying, panic short covering, squeezed up all day long. And really just kind of left behind this poor structure that I felt was most likely going to come down and kind of get repaired. The tricky part is that our overnight session traded all within yesterday's range. Ideally, I would have loved to have seen a gap up in the morning, and that would have been such a high probability setup to get a nice fade, but unfortunately, we just did not get the gap up. So that did make it a little bit difficult coming into the morning. We opened here, ripped up higher, and I missed this. I did not pay attention, but we basically came right into that overnight high and failed. It was very volatile squeeze higher, so I don't know that I would necessarily have caught that even if I was looking at it, because it happened so quick. But wow, I mean, incredible to see that that's exactly, to a tick basically where we rejected off of. Now, again, given the poor structure that we left behind in the distribution yesterday, I was really convinced that we would probably come down and repair those areas today. It was further helped by Trump coming out basically saying that it was unlikely a trade deal with China I think he said that he may cancel the trade talks with China in September, something to that effect. And obviously the market didn't like that. So volatility came in and we really started to sell off early in the morning. So with this first trade, this was actually in pre-market again. So as you can see, we came up into that trend line. And this is exactly what I was looking for. Now, I did not take it as soon as we came up into this trend line because obviously we could just sail right through it. I need to wait for confirmation. But taking it at levels like this gives you super tight risk. So these are 5-minute candles. I waited through this 5-minute candle, still giving me this nice rejection of this trend line. Going to the next 5-minute candle, once again, we are rejecting the trend line and we're putting in consecutive lower highs. So it was on this candle, it was on this candle right here where I initiated my position. I think it was 26.25, which would have put me right about here was my entry on that, okay? So that means that with my risk being just above the high of this candle, giving it a little bit of wiggle room right here over this trend line, that's only a one-handle risk, guys. That's an incredible risk for a futures trade. So if I can get risk that tight, I will take the actual ES versus the micro because obviously the ES is a lot more leveraged. So for every contract you take in the ES, you're looking at a potential gain or loss of $50 for every one handle or 1 point move. The downside to that is that typically, since I'm still relatively new to futures trading, I don't like taking more than 1 or 2 contracts. I have taken more than that at one time. I think it was last week when Trump came out with the tweet about adding more tariffs. Really wild day in the market. That was super, super scary. But I had a huge win that day, so I can't complain. It worked out, but I was really leveraged. It was really risky, and it was not comfortable. So I generally take 1 to 2 contracts when I trade ES, and I have to have super tight risk, 1 to 2 handle risk. And that is hard to get a lot of times in the futures market. So the downside to only taking 1 contract, because it was a Friday, I didn't want to take 2, is that you really have to be, you have 1 shot when it comes to taking your profit because you can't scale out. You can't sell half a contract. That's why the micro is better. You could buy 10 micro contracts, 10, not 5. You could buy 10 micro contracts to equal 1 ES contract. So, take 5 and you've just basically taken half of an ES contract, and that gives you the ability to scale out of your position and leave a runner on in case you get a really big move. Nevertheless, I decided to go with ES because of how tight the risk was. So I took the 1 contract. I was targeting right down here in this area. The reason is because we have a point of control and a value area low from the TAS indicator here on our 5-minute chart. Additionally, if we go and look at our longer time frame chart, we can see that there was also a value area low here on our 30-minute chart, which was right about that 29.19 area. Okay, so I liked the fact that we had those 2 areas kind of converging together on multiple time frames. Additionally, we also have the low of the these candles right here, which is a potential double bottom. So if the price had come down here, this was a realistic area to take profit in case a higher low set in, right? And we didn't actually test the double bottom. So that was the target on the trade. Nice risk reward, okay? Now, as the trade starts to play out, let's hit play and I'll show you why I made a discretionary decision to go ahead and take profit. Okay, oh, I just stopped it a little too late. Can I go back a frame? There we go. Okay, so as we came down right here on this candle, and you'll see it in that video, I noticed that a potential new trend was forming. You'll see that I actually threw a trend line on just like that, okay? So I saw that we came down here, and we were potentially forming a new trend, a higher low, and could possibly squeeze back up. Now, as this trade started to work, I believe it was on this candle, I moved my stop from here to break even on the trade. That removed all the risk from the trade. So that's typically the way I deal with trades like this. As soon as the trade starts to work, I move my stop down to break even, removing all the risk from the trade, and it just makes it a lot easier to hold your position. Now, when we came down here and we started to hold, I noticed that, it was a little bit hard to see initially, but if we look here, there is a volume point of control on the market profile, this yellow line. It's a more prominent volume point of control. It's a very important level. And essentially, that's what we were trying to hold. We started to crack here on this candle. So I was holding, looking for that, move lower. I knew if we could really crack through that level, we did have the potential to come down here, because there is a thin area in the profile right here, okay, before we found a little bit more support. So we could have easily made that move down, but we held, and I gave it just a few seconds. We kept holding and holding and holding. So I decided it was right about here, I believe, that I went ahead and just took my one contract off, locked in $212. And it's a good thing that I did make that discretionary call, because if we go ahead and hit play again, we're going to see that we did in fact hold, and we started to retrace. And here in just a moment, boom, I would have been stopped out. Now, obviously, I wouldn't have let the trade turn red on me because I had moved my stop to break even, but it would have really sucked to give back $212 in gains and get out flat. So, again, it does make it difficult when you only have one contract. But that was the first trade that I took. That was in that video that you saw. Very happy with that trade. And then we basically came into the market open and had that big volatile squeeze up. And I did miss that really great, let's get out of the replay here. I did miss that really great rejection of the overnight high, kind of zooming out a little bit here. As you can see, here is our overnight high. And here was that test and rejection of that overnight high. Very beautiful, but you can see how quickly that happened. Huge squeeze right up into there. You would have literally either had to have an order sitting there or just shorted into that squeeze, which is obviously very risky. It could have easily squeezed well through that level, and there's just no defined risk management there yet, other than you're just hoping that it rejects there, and it did, but that just was too hard for me to really get involved in that, and I wasn't even really looking at it anyways. So we obviously sold off considerably from there. So I was very patient, and I was waiting for a possible entry into this trade. Okay. Now I noticed that as we started to, let's actually go to our other chart, because I have some important drawings on here. We'll go to our 5-minute chart. Okay. So here we go. All right. So here's our sell-off, right? And I noticed that right here, when we started to retrace, that this could be a good area to look at possibly getting into this trade. So once we made this retrace and we topped out here on this candle, I very quickly threw a fib on my chart. So we go from the high here to the low here, right? And if we look, what's that right there? 38.2 retrace. Perfect. Okay, so one piece of the puzzle. The other thing that I liked, let's get rid of that fib. If we look at our market profile here on our TAS indicator, we can see that we have a wide area of distribution, a thin area of distribution, another wide area down here. Okay, so anytime you have these thin areas right here in the distribution, the bottom here, or I guess the top here and the bottom here, can be support and resistance. And then if we get inside of this gap, the 50% can be support and resistance. Otherwise, you would expect for price to fly through this area. The fact that we rejected right here at the top of that wider area in the distribution kind of gave me another piece of the puzzle that we could see a potential rejection off of that level, and that would be a good place to go ahead and get in short. So on this candle right there, and actually let me zoom in on that so it's a little easier for you guys to see on the video. All right, there we go. So on this candle right here, you can see that we opened here and we pushed up and then started to pull back. So I got short, I believe it was right here, right around where this candle opened. And my risk obviously on this was going to be a break over the high of that previous candle. Now I could have risked up to this area here because we have a point of control sitting here, and we also have the bottom of this wider distribution area, but I did not want to give it that much risk. It's not really a lot of risk, but I wanted to keep my risk super tight on this trade. And so fortunately, you know, I got that instant resolution. Now on this trade, once again, my target was going to be a value area low from the TAS indicator here on the 5-minute chart. There's a couple of reasons for that. It's not very far away. Since my risk was so tight, the reward was worth it since I was very conservative on my target. The reason that I didn't really target anything much lower is because we had a very thick area here on the distribution that I knew would be support. Additionally, we have a major trend line and the 50% retracement here. Now, where did I get those from? Let's go and look at a daily chart. Okay, so let's do this, zoom in just a little bit. All right, so you can see here, and I discussed this in last week's market analysis video, this major ascending trend line. This is from our low in December. This is from our sell-off in May. We violated this trend line on the sell-off this week, but then we came back up into it. We interacted with it yesterday, and I actually traded a breakout trade through that trend line yesterday. So I knew that that trend line was still being respected, and so I left it on my chart, realizing that if we came into that today, we could possibly bounce off of that. Additionally, here's that 50% retracement. It's going from our all-time high to the low of the sell-off this week. Okay, so that's where those levels came from. So once again, going to our chart, as you can see here, here is that trend line, here's that 50 fib, all sitting right here. Also this wide area in the distribution. Okay, so I realized that with this amount of support down here, it was very unlikely that we would have much more meat on the bone. Okay, so obviously, you know, it made sense that we came down into those levels, but I was very conservative on my profit target, taking it here just in case we didn't come down to there, just in case kind of people looked at it as I'm going to go ahead and get in now, and we possibly put in a higher low and bounce up. So wasn't greedy on the trade, again, being Friday, taking it very easy, just taking the move, getting out. And with that, I was able to lock in $412 on my futures account, and very happy to walk away with two solid trades. You know, they were really nothing really big in terms of actual points or handles and moves, but you know, the setups were there, and they were executed really perfectly. So very, very happy with that. So with that said, guys, I do hope you enjoyed the trade recap video. Let me know also what you think about the time-lapse videos, something new, something just kind of fun and different. If you do enjoy that, I'll try to do more of those for you guys. All right, so hope you had a great trading day. Enjoy your weekend. Take care, and I will see you guys next week.